All right. Hello, everyone. This is a very special interview that we're doing together today. We have Monika Proffitt, which I love Monika Proffitt's last name because it's in our school name, the Modern Prophets Academy. And this is a very special human that is going to be a significant person in human history. She's doing some big things with something called fractional ownership. She's working with Princeton, working with MIT, has a platform, and we're going to be talking about the philosophy of fractional ownership. Thank you for joining us today, Monika.
Thank you so much, Dylan. It's a pleasure to be here. I'm so glad to be on your Modern Prophets Academy podcast.
All right, cool. And we're going to cue my intro as soon as I figure it out. Hold on.
My name is Dylan. This is my wife, Venta, and our partner in life and in love is our fiancée, Samari. We've paved our own road, living on our own terms, and despite overcoming massive hurdles, now we're traveling the world making millions, designing and biohacking every single day to get the most out of life, and you can too. We are the Modern Prophets, and we welcome you to the Modern Prophets Academy.
All right. So one thing I forgot to mention here is that you are in New York City, and this had slipped my mind. I'm so sorry about that, but wow, what an amazing thing. And you're a survivor of the coronavirus. So
yeah. Yeah, thank you. I mean, it's been a trip. I mean, things have definitely hit us here before anywhere else, in the country a little bit more heavily. So I feel like hopefully any mistakes we made, we can make them for everybody else, and anything that we've done right are some lessons learned that you guys don't have to relearn out there in other cities. I know it's gonna be a long haul. It's not gonna be a quick pandemic, as I don't know of any quick pandemics yet. So yeah, it's been a trip to be here in New York. I'm actually made the decision to stay rather than to go to upstate or to go to Connecticut or go see, family out west. I decided to stay because I knew our, local and state government was going to do the smart thing. And we have. I've been so blessed, I think, ultimately to be here with other New Yorkers. We have a cheer every day at 7:00. It gives my day like a sense of cadence. I go outside and out on my patio, and like we all clap for the healthcare workers, and there's just such a sense.
I heard about that.
Solidarity,
I heard someone describing the scene about some dude doing backflips, everybody cheering, and is there a song that plays? Is it?
Well, actually, I just happened to be filming one day for, Instagram or whatever. And I was just during the cheer. And then right at the end of the cheer, because it's always like 7 to 7:02. You can count on East Coast New Yorkers to be very precise. And right then at the end of when the cheer would usually kind of die off, someone on my block, they were on my side, so I couldn't see in their window, but they start blasting New York, New York out their apartment windows. And like everyone on the street just kept cheering for the whole song. It was just wonderful. So
I'm hearing that same thing, that people are blasting that song. That's really cool. New Yorkers really know how to come together in times of strife and challenge.
Yeah, I saw a sign in someone's window before people started playing this song, and it just said, "It's up to you, New York." And I was like, yeah, we all kind of get it that we're in this together. And that sense of solidarity has been palpable. And it lifts my spirits a bit in a really dark time.
Wow. Well, you seem like a person that doesn't let their spirits go down for very long, if you ever do, because for as long as I've known you, you've been such a bright, shining light, persevering through any challenge. And you and I met, so we were at a blockchain show. I think it was called Block Show, right?
Yeah.
And you and I were both speakers there. And we were at a dinner for all the Forbes writers, right?
Yep. And actually, I remember, this is what I remember about that interaction. You sat next to me. You seemed really nice. You're really friendly, and you were so smart. And then you were talking about your wife. And I was like, oh, sweet, where's your wife? Like, is she going to come? Like, that's cool. And then I noticed you had a screensaver, like on your desk, your like screensaver on your phone was you and your wife, who I met, and then this other woman. And I was like, oh, cool. Like, they might have, like a friend or who knows, maybe that doesn't look like his wife's sister, but we'll see. And then Menza, right? Then Menza comes and is like, hey, baby, and she sits between us and she's like talking to me and she's so sweet and friendly. And at some point she pulls up her phone and it has a screensaver of another picture of the three of you. And I was like, they're a throuple. Oh my God, they're a throuple. Yep. I'm like, this is how they're not out necessarily, like not going to tell everybody, but they're also not in about it. And I'm like, that's so classy. Like, this is my classy throuple friends right here.
Yeah, thank you. Yeah, so now since then, Mari is our fiance. I think I may have told, I don't remember, we had a meeting a while back, but I can't remember if that was before or after the proposal.
It was right after. She was showing
it. Okay.
So cool. Yeah.
Cool.
Yeah.
So there was so you are big in the blockchain community as well. And I want to get to your project. We're going to be taking some questions here. So if anyone has a question, I don't know if we can get to all of them, but if we don't get to them in speaking about it, Monika may be able to answer some of them afterwards and writing. But can you tell us a little bit about fractional ownership and your projects and philosophy, and whatever you want to talk about is fine as well.
Just like start talking, Monika. Don't worry. Yeah. I've never known a soapbox I didn't like, so I'm pretty good on them. So let's see. I got involved in blockchain because I had an idea that never seemed to be technologically feasible until someone said, well, ride sharing used to be really complicated until there was suddenly an app for that. And I had been thinking about this fractional ownership thing for a long time, like since literally 2003. So I lived in an apartment building in downtown Seattle called the Diller Apartments, which had once upon a time during the last Great Depression was the Diller Hotel. And it was also a brothel and like House of Ill-Repute. And it was great. I love the place. All these small little studio apartments for the most part. And all of us, it was mostly artists and, some ne'er-do-wells in this building. And the artists, we never really got things fixed. We didn't pay like totally market rate rent. We were just happy in this community and we never wanted to have to leave. So there was always this kind of whisper in the hallways, like who's got the longest lease, who's not on a month to month, because, we see all these skyscrapers going up around our building and it's only a matter of time till the Dillers sell it, So who has the longest lease to maybe keep them from selling it? And we kind of got around and figured out somebody had a long lease down and a commercial lease downstairs, so we were safe. But I thought, why do we always have to trade security for this bohemian life? We love this building. It's an old rickety building. We would never tear it down. We love it. The owners of it now never want to see it torn down. It's historic. They're the Diller family. They built it, but they want to sell it. And here we are. We want to buy it. We're like the perfect groups of buyers and sellers, except to bridge that, all we have is a mortgage or lending. And like as a group, we can't get communal lending and like we don't have 20% down, and how would our credit scores work? And so I started thinking about this while I would paint in my kitchen. I'd turn my kitchen into a painting studio. I would think about this building, like how could we own the building? And I thought that, well, as tenants, we would just stay paying our rent, but we could kind of like pay it towards shares of it or something. We could take this $4 million building and turn it into $4 million $1 pieces. And I was like, oh, cool. That sounds like a great idea. I see how that would work. And I had the whole thing drawn out and I was like, cool. Well, someone with an MBA should go do that because I'm just an artist. And then I put it away. For like 15 years, I put it away. And I kept like throwing the idea out to people in real estate, like, hey, what if you did this? I didn't know it was called securitizing a building. I didn't know it was a hybrid of like Wall Street securities meets real estate that had never been done before. I didn't know any of that. I just thought someone's got to do this because I want to buy my building like one share at a time. Come on. And people kept saying that sounds complicated. And I was talking to people in real estate and they were like, no, that's just complicated. That's too many people.
They're different industries, these things.
Right? No, you can't do that. It's like, if it's too disparate, people can't get it. So I was like, well, that sounds weird because it seems like it's real money and I don't know why no one's doing it. And then someone said, well, ride sharing was complicated till there was an app. And I was like, oh, maybe this isn't a conversation for real estate people. Maybe it's a conversation for tech people. I wonder what kind of app tech is out there. So then I started looking at that, found blockchain, which basically turns things into securities easily and clearly and safely and securely and lets people have direct ownership of things. And I was like, oh, well, that's why we didn't have any blockchain back in 2003. No wonder nobody was doing it. So fast forward, now we're, seeing more and more platforms starting to try to do this in a different level. And I decided, this is an idea I've been thinking of backwards and forwards for so long. I've definitely got an advantage to anybody who's just going to jump in and try to, throw the latest, interesting thing at some building or whatever. I was like, I think I actually know this space. I'm going to take a stab. So I started Rise Markets, and that's how it came about. I expanded it from Rise Housing to Rise Markets because I knew we were going to be bigger than just real estate. Some people were saying, well, can you package up debt? Could you package up a REIT, several of these? Could you package up the cash flows? Could you tear out and you can. It's possible. These are all interesting financial vehicles, and they're bigger than housing. So I had to expand my thinking a bit and think about how to make that wealth accessible at smaller increments for people, because that's really where you get wealth access. It has to do with wealth building. And if you can't play at a $4 million level, how can you play at a $1,000 or $10,000 level?
Yeah. And I think that's one of the biggest reasons why people don't get into real estate investing, right? Because it's not accessible for them. And I never thought of this as I've owned properties with people. And so in some way, it's kind of like what you're talking about, but another way, it's totally not. Because when I'm owning with somebody else, I'm not securitizing it.
But you are, when you own something with somebody else, you'll start an LLC and maybe go 50-50 or 30-70 with somebody, right?
Yes, that's true.
It's kind of like taking tech and putting it behind that. So you could use my platform to do it if that made it simpler and easier for you to go, okay, great, Monika, you plug this in and now we'll own the shares this way. It's basically mechanizing that so you can take those one-off relationships to scale.
Got it. Yeah. So when I started to really learn about what you're doing, I realized that this is not just something that may happen or may not happen. This is an inevitability. Like things are going this direction, whether or not the normal person can see it. And that's why I say you're going to be a very significant person in human history, because I've heard some other people trying to do this, and you're someone that has it worked out, and it's going to happen. And I don't know that we know when it's going to be really huge, but it's sitting there. It's this thing that you've now created, and I think that. In the future, my students are going to be able to use this. But I know that you created the book, Blockchain 101.
Yeah. It seems a little bit square. It is actually really square. To do here's some technology everybody should learn about. It's just kind of ridiculous. But I realized it needed to be done because, like you said, we don't know really when this technology and these financial opportunities are going to reach people en masse at a scale that really matters and affects society in a way that the average consumer will see and notice. But they're coming. And as people that know the space, the technology space really well, you and I both know that, of course, as speakers at Block Show and people that have used blockchain technology in the past. So I knew I needed to write a book when my favorite cousins, which I have some wonderful cousins I try to see at least once a year, which is always tough. It's going to be especially tough now. When they are very generous and nice over, say, Thanksgiving dinner, when they say, so what are you working on, Monika? And I'm like, blockchain, blah, 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 blah. And their eyes just glaze over. And then they're like, well, that's nice. And they don't know anything about what I just said. They cannot follow what I said. And I'm like, oh, and you're being kind and generous by listening to the whole thing and you still didn't follow. I should write a book so the average people, normal people that don't really care about tech, can see what this is going to do for their daily lives and understand it, because it's coming. And if you know about these opportunities, you're going to be able to capitalize on them sooner and you'll be ahead of the curve. And so just like we saw, decades ago, the first wave of the internet, which is I call the wave of communication, which was the internet is going to be amazing. Because remember back when email, well, I don't know if you remember, but I remember when email was
37.
Revolutionary, right?
Yeah.
So I'm dating myself when I say this, but when it's you're going to be able to interact with someone in Kenya for free immediately. And it's
yeah.
No way. What? You mean the USPS is going to go away? FedEx and UPS are just going to be gone? That's crazy, right? Email is going to get rid of that?
Wait, I want to date myself too with you here. we did a presentation with a fax machine with my second grade class, and it was like we all went to the principal's office where he had a fax machine, and he called somebody up and he's like, okay, yeah, send it now. And he's like, did a presentation. He's like, someone is sending a piece of mail from somewhere else, and in a second this phone is going to ring and that mail is going to print out to right here. And like, all of us second graders were like, no way, you're joking with us.
Right, exactly. And then you're like, this is amazing. And of all of the things, it's weird that you bring up the fax machine, because of all of the things, like the USPS did not go away. Well, not because of that. FedEx, UPS, still here. But the fax machine actually has gone away because of email, right? I mean, that's pretty much over. So, I mean, other than like some antiquated places like maybe real estate closings where you still have to use that crap.
No, it's crazy. Some people want a fax, but I think that no one really has a fax machine anymore. I mean, I have like an app that does the fax thing.
Yep, exactly. Thank God.
Yeah.
Again, we need some tech to take that away. But I think now we've got this second wave of the internet, which is, I think it's not the wave of communication. It's not like, what, you mean I'm going to be able to tweet to the entire Arab world and like make the Arab Spring happen? How'd that? No way. Like, no, that's not the amazing thing anymore. We have that communication. Now it's like, you're going to be able to transact with someone in Kenya right away, immediately, for hardly any fees, or for no fees, with nobody in between and no bank. So then, of course, people say, well, what do you mean banks are going to go away? The dollar is going to go away? And it's like, no, I'm not saying that. I'm saying the equivalent of the fax machine in this new wave of the financial wave of the internet. The fax machine is now Western Union. Western Union has been wiring money back and forth, charging insane fees internationally. Yeah. That's going to go away. Oh, yeah. Mark my words. Western Union is a thing of the past, because blockchain is going to take it away, and we're going to have an app for that. Whether it's Venmo, PayPal, all of them, they're still trying to wrap in and deal with fees that are through traditional banking mechanisms. But once you move away from that, you can move millions for free in Bitcoin. Yeah. Right?
Exactly. And I remember hearing when we were working on our crypto project, we were hearing about the challenges with moving money from somewhere in the Middle East to here, and how you'd have to wire not just from there to here, but from country to country to country, and having a bank officer go with them. And it takes a lot of time. And
yeah, exactly. Because they're
people
trying to figure out the trust.
It's a worse problem than most people would think of when you're talking about sending it from across the world to here.
Totally.
And blockchain completely solves that immediately.
Yeah. And I think that we are going to see some currency shifts. I mean, I think it's a really interesting time to be seeing why is China, here's a good question, why is China making a digital currency? There are so many interesting ways to answer that question, but it means, I think, a lot to international financial policy, monetary policy, and I think it's going to mean a lot to the value of currencies, traditional currencies in the future. This is stuff that, like, this is way bigger than your email is going to make AT&T go away. Like, well, AT&T didn't go away, and email is huge. And AOL started something that Yahoo picked up and Google's run with, right? These are huge things. And so I want to see what blockchain is going to do to digital currencies, to traditional currencies. This is a lot of money on the line with this new wave of the internet.
Yeah. So here's the question. How is fractional ownership in your system? How is that different? Or is it similar to the co-ops, when people buy an apartment building, but they're buying shares of the building? Is it the same thing?
It's really similar. When people hear about fractional ownership in this sense, they go, oh, it's like a co-op. And I say, yes, and. Or they say, it's like a REIT. And I say, yes, and. And it is. I mean, you have to start, everybody starts thinking about something from a familiar place, and then you add in something else as an additive process, and then they see how it's different, right? So when you say it's like a co-op, I say, yes, and in a co-op model, each person has to have lending, because the apartments are still priced as apartments, and most people can't just buy those outright in cash. So they leverage their way into that, and they buy shares in the whole thing, and they each have banknotes that allows them to leverage their way into those shares. What happens if you don't have the banknote at all? Or what happens if you take the mortgage piece over here, like say 70% in mortgage, and you just you only have shares in the 30% of equity over here. And now it's not a matter of mixing in occupancy and, you live in it in a co-op, you have to live in it and own it, all these things. What if you could just go, hey, how much raw equity is out there for sale? I've got $10,000. I'm going to check out and compare the market in New Jersey with the market in St. Louis and see what I can get in the commercial versus residential. And I mean, this is what we're going to see at scale, is where you can put your money to see it grow. And I want to see, like, what is it going to look like for hard assets that are now accessible at a smaller rate, so you don't have to buy an entire house to reap those profits. But also, like, that means co-ownership, co-investing is the main thing here. So as you see markets open up and let people participate at smaller levels, that is a key in my mind to really unlocking wealth inequality. It's a matter of access, right? And you want that access to be really clear and secure and asset backed. It can't be this opaque mortgage wrapped securities, blah, blah, blah. Don't even know what it is. Is it a level A or B plus or whatever? No, like, I want to know I own $10,000 of that building that's in New York City that's appreciating at 5% a year, and the tenants are all paying rent, which they're not right now because we're in the middle of a coronavirus. But that's what I want to see.
So, I love the 7 habits of highly effective people. And one of them is start with the end in mind. And what I'm seeing here is that whereas most people start from a place of something they already know about, what's crazy is we have an artist, you're an artist, that you just thought of, how it should be, and you started with the end in mind here. And so instead of having a box that everybody else is everybody else in the industry is moving things forward based on what was, and you've gotten rid of the box. And now this is this whole thing that you've created where there's no box in sight, because you're setting your own rules.
That's true. I do like to set my own rules. I don't think I would have made it through even college if I hadn't been able. I sorted through the fine print in my college, and it said that you could apply. If you got the dean's approval, you could write your own curriculum and have an independent study. And I was like, that's my jam right there.
I did that too.
I have to make my friend.
I did that too. What was your independent study that you did? I'm going to share mine in a second.
So we were on on our quarterly or semester system. So I had to have a different one for each semester. And so the first one, I had been working in homeless services, and I decided to dress up as a homeless person or dress down and go undercover in 8 cities in America to test the information and referral systems to find out how these homeless service systems were working. Because I'd been working as a service provider, as a social worker in college. And I was like, maybe like I want to see how these systems are working in other places. And maybe I'm not totally understanding the whole picture here. I'd like to see it from another perspective. In fact, I'd like to see it from my client's perspective. So I went undercover as a client in 8 cities. So like Portland, San Francisco, Santa Cruz, Tucson, Austin, New Orleans, DC, and Philadelphia. And it was so much fun. It was amazing. I learned so much about who was going to really help me, who was getting paid and they were ineffective. What was I encountered myself. I encountered the white middle class, college age girl who was so out to help and save the world. And I got to be her client and see the mistakes I was making and see the ways that I was doing a good job and how I was doing a bad job. And that like self-criticism really helped me. So I wrote reports on each city, and now that was a long time ago. And I wanted to revisit that research and do it again, like with a 20 or 25 year, now I'm really dating myself, kind of retrospective, revisitation to the work. So that was like my major cornerstone piece. But I also realized early in college, like if you come out with just the degree, it's just a certification. All it's going to get you certified for is more school and your master's degree. And I didn't really know what I wanted to do. So I just studied as many things as I could, and I made a robust portfolio. So back then, Photoshop was too big of a program to fit on my computer. Like I didn't have enough RAM on my stupid computer to even run Photoshop. But I knew I needed to have digital graphic design, and I needed to have web design as part of my portfolio to come out of and I deal with the world when I got out of school, no matter what I studied. So I got web design. I learned Dreamweaver, which is a predecessor to
I remember it.
Yeah, I taught myself Dreamweaver on one of my independent contracts. And then I taught myself Photoshop, but I couldn't actually get the program to do it. So what I did was I took the book on like Photoshop, I think it was like 1.4 back then, and I read it and I took all these notes and I drew it out on paper to visualize it. And I studied it without opening the app. And so I knew at some point I'd be able to afford a bigger computer. So then when I finally got Photoshop, I knew how to use it.
That's great. That's cool. You want to know what mine was?
Yeah.
It was a wireless control system for a gas-powered skateboard.
Oh my God, that's so cool. You were doing wireless back then?
Yeah. So it was like, I had a gas-powered skateboard that was a 43cc gas-powered engine. It was like the size of a moped. And the board was like 4 feet long. And I had this system. And when I had to have controls in my hand, right? So I wanted it to be like, the user interface to be like ergonomics. So if I'm going to need to stop, I'm going to like hit something, I was going to go like this, right? So this was stop, right? And then to go, I wanted to be an ambidextrous control system. So it needed to be symmetrical, right? And so I figured if I wanted to be able to wear it on either hand, I'd have to use the center fingers, and then I could have some fingers.
Right.
And so this was go.
Oh, that's so cool. That is so cool.
So this brings up a larger point that I think is very important about both of us, and about this is one of the principles of Modern Profits Academy, is to not wait for someone to give you some sort of piece of paper to allow you to feel like, okay, now I can go be great now.
Ask for forgiveness, never ask for permission.
There you go. That's a good one too. I mean? Let's say it again, because I was talking over you.
Ask for forgiveness, never ask for permission. You might get it wrong, but so what?
That's great. Yeah, that's a good one. I say that one too.
Yeah.
Yeah.
Yeah, you were inventing things early. It's funny. I didn't know what I wanted to invent, but I just really wanted to learn and see what people were doing, and I wanted to be useful. But I didn't even have passions like, I'm going to go invent a thing yet. I had no idea what I wanted to be back then.
Me neither. I just wanted the gas-powered skateboard to ride around the campus on.
That's cool.
So that they'd pay for it.
Yeah, that's amazing. Where did you go to school?
Lewis and Clark College.
Nice.
But I got to tell you, if I had to redo it, I probably wouldn't have gone to college. You just find somebody that's doing what you want to do, and figure out how you can provide value for that person, and just go do the thing that you want. But the mysteries of the universe are in these. My green screen is not letting us see it, but they're in the phone. The phone's got it. Internet's got it. It's there.
That's true. I'm glad I was around people that they had done cool things before me. I think I was really lucky with who I just sought out and was around. And college helped me do that. I don't think I would have found people that were doing smart stuff, or people that had a history of doing smart stuff, without getting to know my professors. So I'm glad I went to college, but you're right. There's no direct correlation. It's very abstract what I got out of it in that sense.
All right, cool. So I've got another question for you here.
All right.
How will fractional ownership apply to a normal homeowner or someone that's just trying to come up as an investor from nothing?
All right. So let's take the homeowner. This reminds me of my friend Kathy, who I met under the most wonderful circumstances. I mean, they were very, very trying, but it was just an incredible, incredible opportunity to meet somebody who was so incredible herself. So my father and I had just rekindled a relationship and started talking, and he kept telling me about his girlfriend, who was so beautiful. This beautiful woman. He was in his 70s. She was in her 60s. Oh my gosh, so pretty. And I thought, okay, you like pretty women. I know that, Dad. Well, then my father died unexpectedly in Ecuador, and I had to go to Ecuador to have him cremated and bring him back. And then I had never been to his house. We had just rekindled a relationship. So I had to use his ID to find his house. And it was in this remote place. It was hard to reach. It was hard to find. And even his driveway was hidden. So I had found her email, and I contacted her, Kathy, and I said, will you help me find my dad's place? And she said, sure. So I got there a little early, and I saw this woman walking on the side of the road, pretty far from my dad's house. And I thought, you know what? She's tall and she's beautiful. And I bet you that is my father's girlfriend. And I pull up, I'm like, are you Kathy? And she's like, well, yeah. Oh my gosh, it's so nice to finally meet you. We get in the car, we go. She shows me this absolutely hidden drive to my father's place. And then the rest is history. We end up friends. But she had her own place in that same county, or in one county over. And they would like, travel back and forth to their pretty places because they're both retirees kind of folks. And they've built up their wealth. They've got it all pretty much in real estate, like kind of normal middle-class people. And she had 22 acres with a lake, with like a pond on it. And she'd had a spec house built back 40 years ago. She paid off the mortgages. She had a little rent house she built at some point. She was just kind of hanging out on it, loved her space, loved working outdoors. But, now that area, 22 acres, has come up a lot. It's outside of Austin. It is worth millions.
Wait, I thought we were talking about Ecuador.
Oh, well, my father died in Ecuador. And
okay. I'm sorry, I got confused. So,
sorry. My father died in Ecuador, and I brought him back to the States, and I had to find his house. Sorry, he didn't live in Ecuador. He lived in this. He was just visiting. He just suddenly died, and I was like, "Shoot, what am I going to do? I have to put you in a box and bring you home."
Loss, by the way.
Sorry about that. Yeah.
So we're back in Austin.
Yeah, and it's in outside of Austin. It's 22 acres, and it's worth millions now. But she's just she's never been an investor. She just loved the lifestyle of this place and held on to it for so long that it appreciated. So she's real estate rich and cash poor, in general, relation wise. So how would she ever take any of that money out? Well, she's going to either have to subdivide it and sell it. She doesn't want to do that. How could she maybe securitize some of that equity and pull it out and have a really nice retirement? And then when it comes time for the whole place to be sold, that would be a fractional partnership, and it would, replenish everybody and make them whole. So I was
without having to parcel anything off herself, and without having to sell the whole farm.
Yep.
She can get some money.
She could get extra money. So she could securitize it and own 90% of it and sell 10%, walk away with a few $100,000 and have a nice retirement and still leave a huge inheritance to her nieces and nephews and everybody else in her family.
That's pretty cool. Yeah. I got hung up on Ecuador because I graduated college in Ecuador.
You did? How did you graduate college in Ecuador?
It just was like the last semester. I was a math and computer science major, and I stacked my credits so that it ended at the when I was on an overseas program.
Oh my gosh! So which city were you in?
Cuenca.
Cuenca is just outside of Cuenca is where my father passed away, and I know the Cuenca morgue very well. It turns out I know just enough Spanish to get you cremated.
Wow. Because nobody speaks English in Cuenca. They don't.
No, not at all. Yeah, but so that's how a homeowner, somebody who is real estate rich and they want to pull cash out, that's one way they can do that with this process. Another way for like a real estate investor, they could say, okay, well, I want to go flip that house. I think you are even an example of this, because I know that you have co-invested with people where you are maybe a minority shareholder, but you're the operating agent. And take the operating part off, you just go, listen, let's go get that $700,000 place. I'm going to throw in 50 grand, 150 grand, 200 grand, not a lot, not the majority, but I'm going to get someone else to take over the rest of it. And we're going to go do this together. And you've leveraged your money now in a co-investment that is larger and is going to return more solidly than it would if you had just thrown 30 grand at a $30,000 house. Right. Yeah. So that's really where I see this is community building as well as profit building. Yeah. And that's where I think what you're doing is amazing. You're really building a community around people that want to better themselves and they want to get smarter about stuff that it shouldn't be so mysterious. I'd like to demystify it, because if you can give that value out of education to people, you've given them, it's like, teach them how to fish. I think the more we can learn to fish, the better off we're all going to be.
Yeah. So what I'm hearing from you is that what you're doing is really going to be able to meet people where they're at. If they only have a certain amount of money to invest, then they can find the projects that can fit that. Whereas the thing that we're trying to figure out always is, all right, this is what we want to buy. How the hell do we go and get that thing? And that is, it's an important skill to have, but it'd be easier and more accessible for the average person if they could, if the investments could meet them where they're at and what they already have.
Yep, exactly.
That's why this is going to be so huge. Is because that's why people are, someone that makes no money, they have an extra $50, they can put it into some Google stock or into some Bitcoin, and that's accessible to people. Real estate is this complicated thing that nobody can get access to, but everybody is stuck to it because you have to live in properties. So it'd be way more awesome if you could own a little piece of the place that you're renting, or
well, and wouldn't that be a great way to diversify your risk too? I mean, I wonder if the future, I actually believe that in the future, we're going to see people that go all in on one mortgage, on one property, look like wild speculators. Because you could otherwise take that amount and spread it around to 5 or 10 or 20 properties and end up really diversifying your risk and diversifying your portfolio. So you wouldn't have to wildly speculate and just pray and hope that like the housing bubble doesn't happen again to your city. Right? I mean, you're so tied to these swings in just one, and most people are like all in on the property that they're in, right? It's really uncommon. Someone has to be quite well off to say they've got 7 properties in different markets and how do they manage them all and all of that. There's a lot of infrastructure that I think is going to come up on a property management side to support this type of diversification of real estate and asset-backed securities. Yeah.
Okay. So we've got one more topic that I know we've got to cover, and I've got something in 8 minutes, but I think we can hit it. And I think we can close it. So there's proof of stake, proof of work. These are crypto concepts, but you have a different way of proving. And can we talk about that?
The way that you make Bitcoin is, you can mine it, right? So you're really just trading electricity through this machine that mines Bitcoin and solves an algorithm. And in doing that work, it gets rewarded with Bitcoin. You proof of work. You trade in a thing for some money for doing it. That makes sense. Proof of stake works kind of like a money market account. Like you promise to put your money in that account, it sits there and you get interest. Kind of proof of stake is like that. If you put your energy into this particular network and you leave it there, you'll get rewarded simply for leaving it there. So the way that I've been devising a new economic model is a cost-based economic model. And this is what I unveiled at a talk that I gave at Princeton a few weeks back. And I've been talking with some folks, in different crypto communities, Algorand, Tezos, a few different ones that are really interested in a cost-based economic model where we can see the cost of something actually being the floor of it, and then the scale basically driving down the price to the user. And this really addresses access at the very fundamental. So we don't have to start saying you need to make more money and have more income to get more access to things. We actually just take something, put it into a new system, and drive the price down. So with a cost-based economic model that I've been working on, I'm about to publish on this soon, so if I publish it in time, I'll give you the link to it, but I'll definitely comment with the link once it's up. So cost-based economic model is something where in a traditional world, let's say you build an app and it takes you $1,000 to build it. And after that, in the traditional model, if you get 100,000 people to buy it at $1, then good for you. You're a good businessman. And we hail you as really smart because you have low costs and you made lots of profits and the sky is the limit. And that's fine, but it kind of breaks at scale because when you look at, say, Jeff Bezos, the sky is the limit and the sky keeps getting bigger. He got $24 billion richer during the biggest economic downturn we've seen in American history in the last 100 years or 50 years, right? But he came out so much more wealthy. And at some point it breaks at scale. We no longer say, good for you, $24 billion more, you're amazing. At some point we're like, you have enough, dude. Like, no, actually, we're going to tax you more. You should stop hiding your assets in offshore accounts. Like at some point, we actually don't hail that person as smart and worthy anymore. We're like, that doesn't really, how much more are you supposed to amass? Is this even good for the world? So at some point, you have to name your price. How much should each person amass, right? And maybe it is billions or trillions, but you have to name it and live with it. Because in the current system, we just keep reconfiguring because it breaks at scale. So mine doesn't break at scale. What I say is if you take an app and it costs you $1,000 to make, well, that doesn't add in what you want for your own incentive. But you say, let's just say you'll take no incentive, $1,000. The first 1,000 users download that app for $1. Now you've broken even, just like with the normal model. But after that, the second 1,000 users that download it for $1, everybody has refunded 50 cents because it's just based on its cost. You get 10 of your friends to get it, suddenly it costs you 10 cents because you got refunded 90 cents. So eventually, everything that you bought for $1, you put it in for $1, you go down to a penny. Right? That's how much it costs you in the end because at scale, at proof of scale, it drives the price down. So what's left here is that how do you then add back in the incentive to the creator? So if I make that app, rather than saying, I'm going to take the risk on $1,000 out of my pocket and then the sky's the limit on how much I might make, yay me. Why don't I say, all right, I'm going to take the risk of $1,000, make this thing, but I'm going to, you know what? I'll be happy if I get $100,000 out of it. Or if it goes to 1 million users, I want $100,000 a year. So you start to build that in. And then as people buy it, their prices go down. They keep getting refunded more and more at a certain rate that still also incentivizes you in relationship. So in that model, you can actually functionally build in so that the CEO never makes 250 times what the average worker makes. And it's anything that goes to scale. So it works for something like healthcare. It works for transportation. It works for digital products. It works for anything that can go to scale and grow with it.
There's a really cool book called Free that talks about stuff like that. Yeah, it's.
I'm going to write it down.
It talks about how everything is trending towards being free.
Yes, exactly. And I have the model to make it possible.
Yeah, that's very cool. All right. Well, I'm very interested. What I don't know, and I haven't been able to wrap my mind around with you talking about this is, and this is separate from Rise, right? This is not, okay. So what I haven't been able to wrap my mind around it is who has the authority to enforce this against the person? Because I'm probably more afraid of whatever. I'm a libertarian, so I'm probably more afraid of whatever entity would have the authority to enforce that against Jeff Bezos. I don't like that Jeff Bezos has so much more money than me, but at the same time, I don't know who I think
other than enforcing it. How about this? Just use competition. Be a capitalist about it. What if I make the Monika Amazon platform? And in the Monika Amazon platform, let's just take, say, Amazon Prime. Monika Amazon Prime starts out at $100 a year, just like normal Amazon Prime. But guess what? At scale, because I'm going to cap how much I'll make of it, maybe I only want to make $100 million on Prime. That's still a tiny fraction of what Jeff Bezos is actually making. So as we go to scale, now you have the option of saying, well, do I want to buy Monika's Amazon Prime or do I want to buy Jeff Bezos' Amazon Prime? Because Jeff Bezos keeps my price the same and always takes the extra. But Monika, the more of us that go this way, the more I get refunded. And yeah,
okay, that's interesting. Okay, I see what you're saying now.
I'm glad. Not enforcement, it's just competition.
Okay.
Yeah.
Okay.
So I'm excited to see where this can go, and I'm looking for new use cases. I actually put up a form on the Rise Markets website. I decided it could be part of Rise Markets in the sense that Rise Markets is a broad enough name that we can just say, okay, then we have the equities markets. That's fractional ownership in real estate and other things. Now we also have the scale market. Let's just start a scale market. So I've started an onboarding form. If you have a business that you would like to see what the cost-based economic model would look like in your business, I have an onboarding form where you can type in some of your basics, and we can follow up with you and have a conversation about how we could institute this this economic model in your particular business. And I'm looking for the right use case to work with and see who wants to make a thing. I could go make a digital product, sure, but that's not what it's about. It's about implementing the ecosystem. And if every single business that implements this ecosystem is a part of the Rise Markets ecosystem, or they just use our technology, then people could end up, refunded for buying the Modern Profits Academy digital product for $1, and then they start to get their refund and they have 90 cents in their wallet and they can spend it on the Monika Profit Amazon, and they can then watch that get refunded again, and they can respend it again on a 50-cent download over here, on and on and on. And I'd like to see that grow. Yeah.
Okay. So
there you go.
I like it. Thanks for ending that point with talking about us. So I think that, you and I, we've talked about Rise and Modern Profits being able to do some stuff together. I think that as Rise becomes accessible to, because right now it's just institutional investors and bigger people that are
we're waiting for the regulations not to change, but for our offerings to go through the regulatory process. So it just takes a very long time, and it's another reason why the existing system is built for inaccessibility for small people, and that's what sucks. So once we get through that hurdle, we'll be a lot more accessible.
So at some point, I see a future for Rise and Monika Proffitt integrating with Modern Profits Academy. That I think our students would be able to use. I mean, we could teach courses on how to use your system, how someone can get in there, and I'm sure that I'd like for some of our stuff to be on your system as well.
That would be great. I think we have a very bright future together, Dylan. I know you're a very visionary guy. You've been doing really cool stuff in the space, not only of business, but in love and life. I know you also kind of get rid of the box and recreate it from the ground up, and you defend all of your positions. And I absolutely, I've got your back, man. I really appreciate what you're bringing into the world. And as also a queer person and a poly when I feel like person, I'm really glad to see that you are totally out and you're totally representative of a smart, sane way of living by your own terms. I appreciate it a lot.
Wow, that's a huge compliment. That really makes my day and my week. Thank you so much.
Oh, you're smiling. You're like grinning ear to ear.
Yeah. Cool. Well, I'm going to end it on that note, and thank you so much for joining us. Wow, this has been great.
Yeah, it's been wonderful. Thank you so much for having me on. Let me know if there's ever anything I can do to help you guys out. I love what you're doing over there.
Cool. Thank you. I'm infinitely impressed with you. Thank you so much. Bye-bye.
Likewise. Take care.
My name is Dylan. This is my wife, Venta, and our partner in life and in love is our fiancée, Mari. We've paved our own road, living on our own terms, and despite overcoming massive hurdles, now we're traveling the world making millions, designing and biohacking every single day to get the most out of life, and you can too. We are the Modern Proffitt, and we welcome you to the Modern Proffitt Academy.